Good morning, everybody. Hopefully, y'all are having a great hump day. Today is Wednesday, January 11th. So, just want to do a little bit of a recap before we start the day. Last week was all positive. Yesterday, I did end up taking my first daily loss, I should say. $77. Made $127. The day before, and then pretty much all green, and my average profit per day has been roughly $120. So this is what is known as the expected return. So we'll go over that just real briefly. This is a video that I'm going to make some of the best metrics that you can use to both analyze your previous trading and then predict your future trading. So my win rate overall, based on 20 trades, this isn't a lot of data to go off of, so don't take this as gospel. But if we look at my yearly data this month, I have a 59% win rate, so we'll just call that 60 to make it easy. And my average win so far based on these 20 trades has been $140, and then average loss has been $110 roughly. So we multiply 140 by my 60% win rate, and we subtract the 110 times the 40% loss rate, or 1 minus the win rate. We get an average expected return of $40 per trade. I usually make 3 trades a day on average, so that means I should be making $120, but obviously the data can always change, especially as more data gets added, as the markets continue to shift around, as volatility goes up and down. I might make more money, I might make less money. I typically make more money whenever there's higher volatility versus whenever there's lower volatility, in my experience. But this has been the return so far this year. Very small data set, but up about 600 based on about 7,000 that I'm using to trade options, so roughly a 9% return to start the year in the first couple of weeks. But I started writing down my analysis here on this calendar that I made, which I think is actually a really good use of it. So I wrote down the sentiment that I think will be for the day. It is going to be bullish to neutral today. And my reasoning for that is because of CPI report coming out tomorrow, just like you saw in the title of this video. I expect peak inflation to be the narrative going into this report. The Wall Street geniuses thinks that it's going to come in at 6.5%. I think it's going to come in at 6.6 or 6.7, and I'm just pulling that number out of my ass. I really don't know what it's going to be. Last time I was able to base it off the producer price index falling by 10%, but this time the producer price index doesn't come out till next week, so my best bet is that Wall Street is guessing too low, and it's going to come in higher at 6.6 versus, or 6.7 versus their estimates at 6.5. If you really want to be analytical about it, I think that it could come in lower at 6.4. due to Europe CPI coming in 10% lower. So it could come in at 6.4, but I got some insight on Europe to where one of my premium Discord members was saying that Europe actually caps their electricity prices. So I don't think we have anything similar here in the United States that I know of. We do have subsidies like cap programs where you can tell them your income, and then your electricity and gas prices will be based on your income. But there's not like an overall cap for the general populace. And so that means that inflation here in the US is likely to be worse than what we're seeing over in Europe. So again, my best guess is 6.6 or 6.7, but that is just a guess. So we'll see who's right, me or the Wall Street geniuses. Good morning, Irfan. Good morning, Aaron. Good morning, Jonathan. Good morning, MB. Hopefully y'all are having a great hump day. A good Wednesday. We're getting off to a solid start in the market. The opening bell just rang. And currently we're trading at 392.50. So I had two trades that I opened right before the close of yesterday, which are probably not doing the best. I opened a put debit spread that's down about 216 at the moment. Lost pretty much all of their value. Luckily, I only opened 8 of these for 34 cents, so I didn't spend a ton of money to buy these. Lucky me. Still do think that there's a decent chance I take a loss on this because I am assuming that it's going to go all the way down to 387. Currently, we're trading at 392.50. So it would have to drop about $5 or 1.25% from where it's trading at the moment. I do think that's possible by the end of the day if the narrative shifts from peak inflation to so many lines. If the narrative shifts from peak inflation to it's going to come in worse tomorrow than what's expected. But for right now, I think the overall consensus is that we're going to have better inflation than what's expected. The markets are probably going to rally ahead of that. And if it actually does come in better than expected at 6.4 versus 6.5, we'll get about a 3% update tomorrow. But if it comes in worse, my expectations, if it's at 6.6 or 6.7, will probably drop around 2 to 3%. Obviously, this is just my best guess, so we'll see. But that is my assumption for right now. I still do have a put debit spread that expires for tomorrow after inflation comes out. That one I spent like $350 on. I might add to the position. Not 100% sure yet, but so far this morning we're looking bullish. And I'd really call it hard to say that we're going to drop all the way down to 387. Maybe we go down to like 389 though, if we do get a shift down in the momentum. Right now I'm looking at the 391.9 support level. Below that is 390.63, 389.76, and you can read the rest. But so far, we topped out at around 392.70. Not really a price level that I have drawn up, but that is relevant from the last 2 days, right around here where SPY stalled out for a good 5 minutes, or less than that, I guess. And if we go back on the hourly chart, not really much going on here either to base that off of. Maybe the daily chart, we'll give it one more check, 392.7. Not seeing really much important around that price level, so just a random pivot in the market for right now. I wouldn't be opposed to opening a call credit spread assuming that we're going to go above 393. I just wouldn't spend a lot of money on it. Good morning, Guile. Let me check how much that would cost us. Right now we're trading at 392, so I'd imagine that's going for 40 cents or more. But it's always good to check. Yeah, that is actually 50 cents, which I am not going to pay. No thanks. Too expensive for me. Good morning, Kevin. Good morning, everybody. So I'm just going to wait this first kind of 5 minutes out. Right now, RSI is still above 50, so we're still bullish at the moment. And I guess I didn't really read my full analysis for today. So Bullish to neutral today, bullish ahead of the peak inflation, neutral due to no economic events scheduled for today. The important news for today is that Powell avoided commenting on rate policy at the Fed Independence Conference. It was all about climate change and the Fed's role in helping with climate change, and Fed Chair Powell basically said it's not my job to worry about that. It's more on the private sector that are working towards solutions and on the U.S. government to incentivize that, which I thought was actually a good thing, that he's not pandering to the new worry of the world or what they want us to worry about. But we all do know that the Fed is in bed with politicians, just as corporate America is. But price analysis, we opened around 392. Let me actually draw that price level up. Actually, it's close enough to the 391.90 mark to where it's irrelevant. But we opened 392.23. Starting to move up a little bit more, 392.50. Still think we're going to trade neutral today, so I think I'm going to hang on to the iron condors, but the put debit spreads that are expiring today, I think those are pretty shot. I've got 8 of them that I opened for 7, so there's still $50, $60 left in this trade. That would be about a $200 loss, which sucks, but let's see, 0.06, 0.07 is the bid price right now. We're selling it to close, so we got to go with the bid if we want to get filled immediately. And it does just seem like we're going to continue the rally that we got in the pre-market. Maybe if we go above that 393.04 mark, then I will exit. I'm sure they'll probably be going for like 5 cents at that point, but just want some sort of confirmation that we are going to head up instead of just being flat, because if we are flat for the rest of the day, there's a chance that we come down a couple of these price levels, maybe down to like 390.6 or so, and they would be valued a little bit higher than what they're going for right now. So I'd be saving a little bit of all my losses. Good morning, Kruno. Yeah, it does look like we're aiming for that 393 mark. I just don't want to buy a call debit spread that's worth like $50, $60 at this point. It doesn't seem like it's worth the risk to me unless you're just putting a little bit of risk down. The 392, 393 call debit spread is currently going for 48 to 51. That's actually a reasonable price, I would say. 55 is overpaying, and that's what it's going for now. I'd be willing to pay up to maybe 50, 52 or 53, but no more than that. We could also do, since we're bullish to neutral, and the best trade for that sentiment would be a put credit spread. We could do a put credit spread rather than opening a call debit spread. That would be more fitting, I guess, and I feel like that would be more likely to work out. I would probably say the 389 mark would be safe. 388-ish. We'll see what that's paying first. Hopefully wait on a little bit of a pullback. That way we get a more credit out of it. But we shall see on that. If we assume that it's going to stay above 388, We only get $4 of credit for that. That's pitiful. If we assume it's going to stay above 390, even that's only paying $15 in credit. That's not even worth it, in my opinion. Not at all. I guess we're just trading so high this first 15 minutes of the day that there's really no trade that's worth taking at the moment. Maybe we come back down to that 391.9 mark, we could get some worthy trades, but for right now, it doesn't seem too good. 10-year Treasury rate is down today, 1.2%. That is a positive development for the overall market. Whenever the rates go down, generally stocks go up. Growth stocks specifically have a positive effect on rates going down. And this has kind of peaked out at 39, down to 36 at the moment. If we go to the FOMC countdown tool, right now we're looking at 77% chance of a 50 basis point rate hike for February 1st. Only a 23% chance of a 75 basis point rate hike. And if we look out to June, when rates are supposed to peak according to the bond market, it is expected at 4.75. So that is the funds rate. Right now it's at 4.25 to 4.5. So the markets only expect 50 basis point rate hikes between now and June. Wait, we're currently at 4.25 to 4.5%. So that means that the markets expect a 25 basis point rate hike for the month of February. I was thinking it was 50-75, but this is actually 25-50. So they expect the rate hikes to continue to decrease in size. Interesting enough. And for, let's see, March, they expected at 4.75. So another 25 basis points. And then they don't expect any rate increases from March to May. And then by December, they expect the rates to actually drop by 25 basis points from June. So they're expecting rate cuts when the Fed has specifically said that they're not going to be doing any rate cuts for 2023. I'm certain that inflation will be lower. Will this be bullish? Yes. Whenever it comes in lower than expected, you usually get about a 3% rally. So if it comes in at 6.4 versus 6.5 is what's expected, then you'll get about a 2 or a 3% rally. Looks like we're headed to that 393 level. 393.04. Could be a decent breakout. Not sure if the markets are just getting ahead of themselves in anticipation of the rally or anticipation of the CPI coming in good tomorrow. That would create more opportunity to the downside if it does miss expectations. Trading at 393. My assumption is we go below. We come in worse, we go below 390 or 387 tomorrow, which is 6 points away off of a 394, we'll call it. It's only a 1.5% drop, so still feasible that we do get that. But that is on the contention of inflation coming in worse than expected. And it's really anybody's best guess at this moment. Last month we had the producer price index to gauge it off of, but this month we don't have really anything besides European CPI, which came in 10% lower. But can't really use Europe as a proxy because they are going into a or they're already in a recession for one, and like Roddick said in the Discord, they have caps for their electricity prices, whereas in the United States you have to like apply for that, and you have to meet income criteria for it. All right, looks like we got rejected from the 393 mark at the moment. The trend could always continue. We just went overbought for a second at 70 on the RSI. Still above 50, so I wouldn't quite short it yet. If you do, just take on a small size. Most countries, it's capped for everybody. Interesting. Yeah, I think these could be a bust. I don't know. I kind of want to hold them to the end of the day. That is another $40 or so that I'll lose out on if it doesn't go to plan. But I think the reward might outweigh. Let me see. Let me go to option strat, see what these would be valued if we head down to that 390 or 389 mark by the end of the day. So if we go to option strat, yeah, I would be careful with thinking CPI would be bullish. We already got a rally ahead of it too, so that just makes things worse if it does miss. But this is a bear put spread, put debit spread, also known as, and it expires today. Strike prices that I chose were 387, 388. Right now, they are going for around 6 cents a piece. And if we do head down to 390 at around 3 o'clock, they would still be valued at $3. If it goes all the way down to 389, they'd be valued at 13. I don't know. I'm hesitant on it. Hesitant to hold on it. Unless we just flush down to like 392 by the end of this live session at around 10:30. They'd be valued at 20. But we got to get a solid rejection off of that 393.04 mark first. All right, looks like we're breaking that 393.04 mark. Headed higher. Maybe we get a pre-CPI breakout. I would be shocked if we did, but I wouldn't put it out of the cards entirely. What about an inverse IC? You could do that. The problem with an inverse IC or a long IC is what you're talking about, is that you're going to pay double the price. So you're basically buying two debit spreads. So you're paying double the price. You don't get as much risk reward. And in the off chance that CPI comes in at expectations, it might just be a flat day tomorrow. That would be the most unlikely outcome, but it is still an outcome nonetheless. It's like getting handed 4 aces, but if you got 4 aces, then you're doing pretty well. All right. It still seems like we're getting rejected by that 393 mark, but No promises yet. I would like to see us come below 392.22 if we want to confirm the bearish price action, which is right around where we opened. 392.23 actually. That's where I think we could get a pivot, possibly. Let's see what the big names are up to. Tesla is positive 2.4% today at $122. Apple is trading at 131. What else we got? How's McDonald's doing? Down 0.4%. Interesting enough. The Dow is up just 0.2%, whereas SPY is up 0.5%. So tech is leading the way mostly this morning, and that's not too surprising considering the 10-year Treasury rate gapping down 1.3%. So maybe we could take a bet for QQQ, assuming that it's going to go above 276 if we get a decent rally from the 10-year falling today. Certainly a possibility, given that there's no other news to drive the market. If the 10-year Treasury rate just hangs low, you should get a decent bounce for the Qs and for growth stocks. And looking at a QQQ call credit spread, assuming above 275 today, that's going for 55 cents each. So you're almost getting a 1-to-1 risk reward. Not quite there. Whoopsies. I've got a support level at 274.22 that we could wait for. Maybe get it cheaper. Maybe. But yeah, looking at that QQQ call debit spread right now, it's going for 55, assuming QQQ is going to be above 275 at the end of today. It's not a bad price for it, not the best price, I would say, but somewhere in the middle. Wouldn't want to spend a lot of money on it personally. Probably only like $200 at best. And we got that dip down. All right, and that made these a lot cheaper. We're right at that 274.22 mark. We're at 59 on the RSI, so it's still bullish. All right, I think I'm just going to use this as a hedge just in case we do get upside today. All right, so I opened that QQQ call debit spread, assuming that it's going to be above 275 at the end of today. And it just dropped below that 274.22 mark, but that is A-okay. New options alert. This is a day trade. It expires today. P1F. Just opened a new QQQ call debit spread. This expires today, 111. And I opened it at 51 each. All right. 10-year Treasury rate gapped down. Currently down 1.3% today. 1.3, we'll call it 1.4%. This morning, which means tech and growth stocks could rally more if rates continue down. I think we actually have a bond auction today, though, so that might cause rates to go up at the end of the day. So we want to get out of this trade by the end of the day is ideal. So if we head on over to the economic calendar, where the hell is it? There we go. The econ calendar. I guess it was yesterday. No. We had a 3-year bond auction. Where's the 10-year treasury bond auction? Could have swore we had one. Yeah, it's at 1 p.m. So I want to get out of this trade by 1 p.m. because then the rates are going to start to probably climb whenever the Fed sells treasuries off of their balance sheet. The price of the bond will go down because of the added supply, which means that the rate for the bond is going to go up. So want to try to avoid holding this after 1 p.m. Getting a little bit of a bounce for Qs right now. So I got one trade to the upside with the Qs, one trade to the downside with SPY. I guess 2 trades to the downside with the CPI included for tomorrow. And then an iron condor, assuming SPY is going to be between 387 to 394. That one seems probably the most likely of the 3 trades. That one and the call debit spread for QQQ both seem the most likely for right now. Looks like we overpaid a little bit for the QQQ call debit spread since it's up from when I originally snagged these whenever it's trading at 274.22. I opened just 4 of these, so I didn't spend a lot of money on it. But currently up 4. Kind of looks like that could be a pivot down, but we shall see. We're still above 50 on the RSI. What happens to the VIX on CPI days? If it comes in worse, VIX will go up. If it comes in better, VIX will go down. VIX generally has a negative correlation with the S&P 500. And it's trading at 20.77 right now, so this is really hanging down there. I'm surprised that it's as low as it is at 20.7 ahead of a CPI report. That is pretty shocking that it would be close to the yearly lows when one of the biggest reports is coming out tomorrow. VIX tends to revert back to the average. The average over the last year has been 25.5. So we could see a decent gap up if the CPI comes in worse than expected. I've been buying $100 worth of UVIX on a daily basis at this point. I'm going to continue to do that today. And today's Wednesday, so I shouldn't be buying Tesla or my other stock that I buy $100 worth of, Fulgent. But let's see. I want to buy some more UVIX shares since it is hanging low at the moment. So $100 worth, 16.63 shares, and that should bring me up to 500 total. Hopefully. VIX call spreads. I think that's a good idea. Regular VIX call spreads are probably the best. UVIX, on the other hand, I would not want to double leverage because it's already a leverage asset and it already loses time decay. So if you are, let's see, if you're gonna buy options on UVIX, I'd rather do it on VIX. That's what I've learned over the last few weeks. Unless you're doing like a 2 or 3 day trade, but if you're doing a 2 to 3 week trade, then Kiss your money goodbye. Just bought 100 worth of UVIX. Buy alert. I didn't mean to make it all caps, but it is what it is. And now I have a total of 491 shares, so we're almost at 500. Not quite there. Kind of want to just buy nine more shares to reach it before the CPI report tomorrow. Maybe we buy it later today if the stock market keeps trading flat. That's going to bring UVIX and VIX down. 491 shares now. Total shares at 719. Why am I so positive on VIX? Because it's hanging so low. You have CPI coming out tomorrow, which is a very volatile event. And based on the cycles that we experienced last year, each one is about 2 to 3 months. So far, we are just 1 month into this one. So there's about 8 weeks left for this. And I think it'll probably pop over the next couple of weeks. You're going to have the January 20th expiration date. That's going to be a big expiration for options, especially like Leaps options. There's probably a lot of them. But just based on past results, seeing the cycle of the VIX, basically, it is a mean reverting, not really a stock, but it basically reverts back to the mean, and the mean has been 25.50. Right now we're trading at 20.75. So just based on averages, this has about 20% of upside. Let's see. 25.5 over 21. Yeah, 21% upside on this. On the past 2 CPI reports, VIX drop. Yeah, I mean, they were both good CPI reports, so whenever you have a good CPI report, the volatility will drop. Whenever you have a bad CPI report, the volatility will go up. Jeez. Electricity prices would be 3 times without the cap. Ugh. All right, these put debit spreads for SPY, assuming under 387 by the end of the day, are going for 7 now. I think I kind of want to close for like 10. Let me check what the value would be. Again, on option strat. Whoops. Bear put spread. Changing the strike price to 387, 388. Yeah, so it's not really expected to move that much today. But if we're assuming that it would go back to 10 cents, we would need it at around 391.50 by 10:51 a.m. Really don't think we'll be able to get rid of it for much more than that. I just don't think there's going to be a lot of volatility in the market today in general. Just based on no economic events scheduled today. There could always be some wild news piece that comes out of the blue. Let's see. The World Health Organization says we have added information provided to us by China on how they are focusing on COVID-19 vax efforts and treatment. Non-news, non-important news. U.S. Committee Chair, Senate Commerce Committee will investigate the cause of the FAA computer system outage. So that was this morning where 4,000 flights got delayed. People are thinking that it was a hacker. I think that is just old, antiquated systems, and you shouldn't rely on a single server for the entire nation. But yeah, there's a FAA ground stop. So basically all flights across the country were halted for the better part of like 1 or 2 hours because their servers went down, which is ridiculous. CPI tomorrow, am I bullish or bearish? I'm bearish for it. I think it's going to come in 6.6 to 6.7%. Wall Street geniuses think that it's going to come in at 6.5%. Don't really have anything to base it off of other than Wall Street geniuses aren't geniuses. And I think that they're wrong and too low. This might be the range for today, 391.90 to 393.04. Seems like we're just going to keep going up based on the MACD and the RSI. Both RSI is about 50. MACD, you're getting the lines kind of intertwining. If the blue line continues to head on up, we're probably going to blow past that 393 mark. But I'd say the most likely outcome, again, is just bullish to neutral today. So either we head above 394, we'll probably at least stay above 392. So you could open a put credit spread. You would be taking on quite a bit of risk if there's a sell-off at the end of the day. If you want to be safer, call it 391, 390 maybe. Let's see. If we do a 391, 390 put credit spread, that one is paying only 23 cents in credit. That's not as much as I would have expected, so not worth it in my opinion. Unless we come a little bit lower down to like that 391.90 mark, then it might be a bit more worthy. But if I'm assuming that it's going to stay $1.50 below where we're trading right now, I would want to get at least like $25 in credit. But they're just not willing to pay that for right now. Not willing to pay that at all. Yeah, it looks like we're rallying back to that 393 mark again. Okay. All right, I'll bite. I'll take the put credit spread, assuming on over 391. Probably going to try to close it at a relatively quick fashion. Don't want to hold this into the end of the day, just in case we do get a sell-off ahead of the CPI report tomorrow. People think that it's going to be bad, but I think the overall consensus is that it's going to be good. Inflation has peaked, and we'll see if that's actually the case tomorrow morning. Oh, now it's paying 20, so I can get a little bit more credit out of it. Hopefully. Looking at 19 or 20 for each. Yeah, it's gone for 19. And now that bid just dropped to 18. I hate Robinhood screwing around with me like that. There we go. All right, so I snagged that put credit spread, assuming that we're going to stay above 391. But then just today, still got some trades to the downside, but I'm more leveraged to the upside today. Again, I think we're going to be bullish to neutral. New options alert, and this one is probably the best fit trade for that. just opened a new SPY put credit spread. Expiring today, 111 at 19 each. I should specify that that is a day trade. Probably going to open some more swing trades at the end of the today. QQQ is making its way up to 275, so the call debit spread we open ought to be doing okay, hopefully well. Currently up 24. Originally bought these at 51 cents each. Currently going for 55. I'm looking for it to head above 275, but we haven't got it quite yet. Maybe we set an alert at or above the 275.15 mark. At or above, not below, please. The dollar is flat today. The 10-year Treasury yield is still down, so that is bullish for the Qs. We'll see which trades work out today, though. Right now, I've got the 274, 275 call debit spread for the Qs. The put debit spread has lost pretty much all of its value for the 387 strike price. Heading down there is pretty low odds, I should say. I could still save $40 on this. But since I am so leveraged to the upside, I kind of want to keep that just in case shit hits the fan sometime today. So we got 4 options that are expiring today. I'll have to manage those pretty diligently. I think we try to close these at 5 each. I don't think we'll get filled for it, but I'll try to close these put debit spreads, assuming under 387 at 5 a piece. The ask is 6, the bid is 4. So this one I will take about a $230 loss. Yeah, not expecting anything major at all to happen today. It's all about CPI tomorrow. So if the expectations is that CPI is going to be good, going to get a rally today. But at the same time, since we don't have anything going on today, that could also just mean that we trade flat. Currently, we're trading at 392.50 for SPY, 274.60 for Qs. Volatility is still super low going into CPI tomorrow, but we shall see. Yeah, it's probably just going to be, since it's low volume today, probably just going to be an algo-driven day where just going to trade based on the trend. And the trend is definitely up this morning. 70, almost 62 on the RSI for the Qs. The MACD is good, positive, and blue line is still above the yellow. That's what you like to see if you want to continue the bullish momentum. But SPY is just kind of undecided at the moment. Not really much change at all. Like, I really want to open an iron condor or an iron butterfly, assuming that we're going to be dead in the middle between these strike prices at like 390. I would call it 393, an iron butterfly, assuming that we're going to be 393 at the end of the day. Actually, I'd probably be more biased to 392 for the end of the day, for the close. But I already have like 4 other trades open that are expiring today, so I don't want to overwork myself and have to worry about closing 4 trades. Tesla breaking out at the moment, yeah. It's trading at what, 121 last I checked, TSLA. 124, Jesus. That's a nice rally, 4.5%. Ooh, that seems like a good short to take before CPI drops tomorrow. I hate trading Tesla, though. I would not trade it with a fucking 10-foot pole. As volatile as it is, it's just too risky for my taste. But the Qs are going up. SPY is trading flat. Very interesting day, to say the least. Right now we're up 16 for the Qs. Down 230. This never got filled, I'm assuming. Yeah. Never got filled at 5. We could try to get out at 4. Oh, actually, yeah. That actually just went through. Good. SPY just went down to 392.20 and that got filled. Good for me. I'll take it. Save my $40. Watch it just start to plummet immediately. Take all of my money. Alright. Closing options alert. Premium 101. Premium. Just cut losses on the 387, 388 SPY put debit spread. This one expires today, 111 at only 5 cents each. Unfortunately, I opened those at like 30 something. Put debit spread. Tesla's continuing to rally, so I'm assuming that means that Q's is continuing to rally along with it. Originally paid 35 each for 8. So that's a $30 loss in each one. 30 times 8 is $240 on the loss. Which blows, but part of the game. Make sure to log that one in to my spreadsheet. And that is going to probably make my average loss worse. I think that's one of my bigger losses so far to start the year. But not as big as it used to be, so I'll take it. Alright, let me zoom out of this. I don't know why it loves to zoom all the way in and get up close and personal. But let's see, 387. Oh, I opened them at 34 each is what the spreadsheet is telling me. My Discord is telling me otherwise. Yeah, it is 34 each. I just can't read. Alright, so 34 minus 5 is 19 times 8. Or no, sorry. 29 times 8. $232 loss. Not much of a difference, but every dollar adds up at the end of the day. Alright. Still got the BLK put debit spread open. Still got the SPY put debit spread assuming under 380. Ooh, that is supposed to be 387, I thought, tomorrow. 112, 385, 386, though. Could have swore it was 388, 387. No, both of that is wrong. 387, 386. Okay. Alright. Still haven't closed that one yet, but Opened what, like 3 trades this morning? Let me check. And we'll do our entries. Always make sure to log your trades, because what doesn't get measured doesn't improve. Okay. So this morning, we opened a new... No, that's yesterday, the Iron Condor. Opened a new QQQ call debit spread. Debit. That is a bullish sentiment. And that one expires today, 111, so it's a day trade. Long strike price, we chose the 274. Short strike price, we sold the 275. I opened only 4 of them. Paid 51 cents each to open. Opened a put credit spread, assuming over 391 for SPY. Put credit. Whoops, that is not. There we go. That is a bullish to neutral trade. Expiration is today, 111, and I got 19 cents each to open, 0.19. Strike prices I chose were the 391 and the 390 I went long, 391 I went short. And which way will SPY trade today? Bullish to neutral in my assumption. And then that last one, I just cut losses, which I already logged in today. So that is all the trades that I've got. Let me just highlight this to make it uniform. Sweet. Yeah, Tesla's continuing to rally 126 at the moment. SPY's at 392.8, and Q's went above that 275 mark. I think I'm looking for just above 275 for the price alert at 275.15. We're almost there. Almost there. So now the call debit spreads I opened are up 50. Originally opened them at 51 each. Now they're going for 50 or 65. Jeez, that's not a bad price at all for 215.15. I think they're a little bit pricey at that. I would probably call them like 62 cents, worth about 62 cents, but the markets are saying they're worth 64. So we'll just watch the Qs, try to get out of this trade, hopefully, at the end of this live session. The bid is 62. We could get out of it now if we want to take profits and run. Just want to see if it breaks through the 275.15 mark or if it just gets rejected by it. No clear decision yet. Looks like a rejection so far. Tesla's up because they're planning for a factory in Indonesia is finalizing. Interesting. I did not hear about that. Indonesia. Worst performers of 2022. Not really seeing any news on it. Tesla files plan for $775 million expansion of the Texas factory. So they're expanding production even more. In talks, oh, there it is. Reportedly in talks to set up the factory in Indonesia. So, yeah, they're expanding their supply. It's good. Problem is demand right now is waning because of the global recession. So it is kind of a double-edged sword. If they do produce more and the demand continues to fall because of the worldwide recession, that means that the price of their vehicles is bound to come down, which means that their margins for their vehicles, which have been so good over the last couple of years, the margins on their vehicles is going to come down. They were making like 30% margins per car, so for each car they would make about 30% profit. Actually, I think it was like 20%, but that margin that they're making on top of, how much it costs them is going to shrink if the demand comes down and the supply keeps going up. Both of those are negative towards price. It's just a matter of people being able to afford it. Like, people can't afford to buy a $60,000 vehicle when it costs like $1,100, $1,200 to finance right now. It's just too much for the average person. I think that they really need to work on coming up with a new compact car, something like the Toyota Corolla, or an equivalent to the Toyota Corolla or the Hyundai Elantra. Make a compact car and then sell that ideally below $35,000. And then with all the incentives of the tax incentives of $7,500, that brings down the price to $27,500. And then on top of that, you're saving money not having to pay for gas. Electric is a lot cheaper. You don't have to maintain the vehicle. So you're saving probably a good $5,000 or so from not having to pay for gas, oil changes, and things that come with ICE. So really, you're basically getting the same car at $22,500 at the end. I guess the lifetime value of the vehicle would be $22,500, which would be along the lines of Corolla. They would have to sacrifice a lot of quality, I would think. The interior might not be as nice. They might have to degrade to a cloth interior instead of a leather interior just to bring down the price of it, but we'll see. Do I use options profit calculator or option strat? Sometimes. I used it a little bit this morning, but generally, for the most part, I don't use it. QQQ is trading at 275.30, so the call debit spreads are now going for 60. How are they going for 62 now when they were 62 whenever it was trading at 275.15? That makes absolutely no sense. I've become decent at assuming what price it'd be trading at. It should be trading at myself, just because I trade spreads so often. And I'm used to knowing how far away it has to be from the price levels that you set up and what time during the day it's more likely to be valued. So right now it's at 10:30, so we still have like 5 hours to end the day. So the idea is that generally whenever the stock is at the strike price that you sell for a debit spread, so for this one I sold the 275 QQQ call option. I bought the 274. So if QQQ was trading at 275 flat right now, generally it would be valued at around 60 cents each. And that usually lasts throughout the day, I would say up until 4 p.m. really. And then if it's $1 above, say it's trading at 276 right now, this would be going for roughly 70 cents. So right now these are a little bit overpriced. It's almost 70 cents already, so it's getting a little bit ahead of itself. But still holding it. Currently up $64. Originally bought these at 51. I think I got them at an okay price. Tesla's starting to pull back a little bit, which gives me a little bit of concern for this trade. SPY is still not going above 393. The bid ask on these is so wide. It's crazy. 62 and 69. Usually with SPY, you only have like a 4-cent bid ask spread at most. But yeah, I think these should be valued right now at about 62 cents. The bid is 60. We'll see if we can get filled. Try to take our profits now that Tesla's reeling back. Do I think Tesla will be green throughout the day? That is purely a guess. I couldn't tell you. I don't follow Tesla that closely. Based on the 10-year treasury rate, I would think that pretty much all tech and growth stocks would be doing well today. 10-year treasury rate is currently down 1.9% after a gap down this morning from 3.6% down to an open of roughly 3.62 versus 3.6. So that is positive for QQQ, positive for Tesla, and positive for pretty much any growth in tech company. So based on that, I would assume bullish, but there's also other things you have to worry about, like the CPI coming out tomorrow. If there's any fears going into the CPI report, that's going to cause a sell-off towards the end of the day. And now these are going for 56 cents. That's too cheap. Let's see if I can try to get them out at 60 cents. I'd be happy, but no promise there. Area spread is 0 cents. Of course it is. All right, we ought to have been filled on that. Yeah, it's 60 cents each, so small profit, but profit nonetheless. I'll take it. 51, close them at 60, so $9, like $40 profit on that trade. Wish I got out at like 62 or 65, but can't always get what you want. Closing options alert. Premium 101. Premium. Just took profits on the QQQ 274, 275. Call debit spread that expires today, 111 at 60 each. Now they're going for 63, of course, after I closed out of it. But it's still trading at 275. So again, if it's trading at the short strike price, the strike price that you sell for a debit spread, it's usually valued at 60 cents. If it's trading at the one that you buy, 274, then it's generally valued at 40 cents. So I don't want to ride that back down to 274 if we do get a peak for Tesla and a peak for the tech and growth market. So I am out of that trade. Make sure to log it here, 111. Make sure that we type in close since we did not let it expire, and close that at 60 cents a pop, $36 in profit, bringing my average win down to almost my average loss at 130 and 130. But win rate is still hovering around 60%. So overall expected return is going to be positive. Let's see. That is not right. My win rate is, oh, I guess this is the strategies one that I'm working on, 58%. But yeah, that is, I think, the last trade that I'll make for today's live session. Still got a few trades open. The put debit spread that expires today. I thought I got rid of those. Did I not? Let me refresh the page. I could have swore I got rid of those damn things. I think I got rid of one of them. I only got filled in 1 of 8. That's annoying. Alright, well. That sucks. SPY at 392 or less. I would assume end of the day it's going to be 391. Or no, 392. My assumption is we're going to keep trading in this range between 393 and 392. It's a very tight range, so I wouldn't put a lot of money on it, but my assumption will probably land between we'll probably land at that 392 mark. We'll probably be positive for the day, but not super positive. But yeah, that's the end of today's live session, and I will catch y'all for the CPI report tomorrow. Hopefully y'all are hyped up for that. Bye, everybody.